Thank you for joining SPI Logistics in this week's market conditions. The global transportation market is experiencing significant impacts due to disruptions in major shipping routes. Container ships are rerouting around the Cape of Good Hope. Red Sea conflicts and Panama Canal drought have collectively increased shipping distances, leading to a surge in shipment costs in those lanes. This situation has contributed to a notable uptick in container shipping rates, with the Global Container Freight Index, FBX, rising by 88%. Other vital routes, such as the Mediterranean to China, East Asia, have witnessed a substantial increase of 228%. Look for more shipments to be diverted to West Coast ports of the U.S. in the coming weeks as shippers look to protect shipments and reduce costs. In the broader economic context, the disruption in transportation supply lines contributes to increased inflation concerns globally. Central banks are responding by raising interest rates to curb demand, leading to a cooling effect on inflation. However, this comes when households and businesses are already under pressure, causing a slowdown in world trade volumes and economic growth. The resulting economic challenges raise the specter that a full recovery may only be realized in the latter half of 2024 or early 2025. Stay tuned for our next segment as we explore rate, data, and capacity trends. Welcome back to Market Conditions, hosted by SPI Logistics, your true news source for the logistics industry. In recent data, the National Truckload Index, NTI price, inclusive of fuel, has held at $2.43 per mile. The National Truckload Index line haul, NTIL, rate, which removes fuel, remained at $1.81 per mile. For reference, the lowest spot rate in 2019 was $1.47. Contract rates, which are base line haul rates like the NTIL,
have increased by 2 cents to $2.34 per mile.
Note, spot rates have increased considerably. However, this is mostly related to the holiday break. They are predicted to lower over the upcoming week. Lastly, let's turn to our next segment and discuss capacity trends. The Outbound Tender Reject Index, OTRE, which measures relative capacity in the market, increased to 4.17%. For reference, anything above 6% is showing capacity as tightening. The Van Outbound Tender Reject Index, VOTRE, was last reported at 3.39%. For reference, the index record low was 2.3%. The Flatbed Outbound Tender Reject Index, FOTRI, was last reported at 6.3%. The Reefer Outbound Tender Reject Index, ROTRI, was last reported at 6.87%. Reefer volumes and reject index will increase with seasonal tightness in the coming months. I would like to add tender rejections are an indicator of trucking capacity conditions. Declining numbers indicate carriers are losing pricing power, while increasing numbers indicate carriers are gaining pricing power.